What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on natural gas prices.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And on today's video, first of all, I will show you where we are on a price chart and how this asset lost for the last 7 days almost 18.2% of its value. Then I will continue with the fundamental news and I will show you why it is happening right now. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. So let's start with the price chart. We are on natural gas spot prices, and I made my previous video somewhere at this point, and my main assumption was that we have to land somewhere lower. At least we have to retest the $2 mark as the range of support, because we have to complete the fifth wave. And from the point, from the very beginning of January of this year, from January the 9th, we potentially have this breakdown. This is our first wave, second, third, fourth, and we are still forming this fifth wave. And guys, on my previous video, I told you that you shouldn't enter any long position because we have to see a confirmation. And confirmation should be higher highs and higher lows on a smaller scale that leads to the same pattern on the bigger scales, on the higher time frames. And guys, take a look on the natural gas future prices. It is also in a free fall, and ticker symbol BOIL also broke this range of support. And I made my previous video at this point. I told you not to enter the position as long as we don't have this confirmation. And yes, we have the lowest price for ticker symbol BOIL. And guys, be careful with this ticker symbol because it is a leveraged ETF, and because of its origination, it has to go lower over time. So I have to admit that if you want to know more details in technical analysis, feel free to subscribe to my YouTube channel and to join my Patreon account, where for the $35 a month you will be able to drastically enhance your trading skills. On top of that, for the first 100 subscribers I will do a giveaway. I will do a technical analysis based on your request on any asset that you might find. That is why I think it is quite fair deal. So, and let's continue with the ticker symbol BOIL. If you take a look, if you zoom out to a daily time frame, and if you take a look on its price section, remove all drawing tools, you can see that it is in consistent downtrend. And let me show you why it is happening. If you Google why BOIL is in consistent downtrend, you will find this article from Seeking Alpha, and it says, in summary, the BOIL ETF combines the worst features of a rolling futures fund and a leveraged ETF. It suffers from futures roll decay as well as volatility decay. It is primarily a reason why over 10 years the fund has lost an average of 41%. Despite spot natural gas prices actually doubling. And guys, why I use this ticker symbol as well? Let me show you in details. If I zoom in to its latest price action, switch to hourly time frame. From the point when I made my previous video, somewhere at $21.01 to the current range, it lost more than 28% of its value. If you take a look on the natural gas spot prices, from the same point, from this spot, you can see that it lost only 18, almost 19% of its value. And natural gas futures also lost the same amount of value, about 17 to 18%. That is why, guys, you can bet on ticker symbol BOIL only if you know that the trend is established and if you want to have a higher exposure on the natural gas market. But at the same time, be cautious and do not invest in this asset in the long term because its nature is to go to the downside. So let's continue with the fundamental news. Why the natural gas prices are in consistent downtrend? And let me show you this. We are on tradingeconomics.com, and here you can see the summary. US natural gas futures fell to below $1.8 per MMBTU, the lowest level since September 2020, as production is returning to near record levels after gas wells resumed operations following the severe cold in mid-January. Also, technical problems at Freeport LNG's export plant have restricted gas flow to the nation's LNG export facilities, and record levels are not expected until the plant returns to full power. Furthermore, government data showed US utilities pulled 75 billion cubic feet of gas out of storage last week, significantly less than the 217 BCF withdrawn during the same week last year. The report also showed gas in storage remains 10.6% above the seasonal norm. Looking ahead, meteorological forecasts suggest temperatures will remain above average until February 15, before declining to mostly near to below normal levels from February 16 to February 23rd. And guys, this is the potential deadlines for the trend reversal. We have to see this reversal somewhere in between 16 to 23rd of February. And that is why we are nearing this range in terms of time. And that is why, guys, prepare. You have to be prepared for this trend reversal. But at the same time, and let's continue with the technical analysis, and before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. At the same time, guys, I don't want to dig deeper inside this movement. I have to admit we are natural gas spot prices again. I have to admit that we have an extension in the fifth wave, and to be honest, the range of 0.786, it is the most common price target for the fifth wave compared to the third one. And as you can see, if we invert the scale, you can see that we have to pull the FIB extension tool from the bottom of the second wave to the top of the third wave and to the bottom of the retracement. And here's the spot where we might land in order to complete the fifth wave. And guys, we are here. We are here. That is why let's take a look on the indicators. So 1 hour time frame is pretty much 2 hours time frame, again not so bullish. 3 hours time frame, yes, here we can see that it is forming some kind of bullish divergence. It broke one bullish divergence already. As you can see, we could connect these bottoms, and we have lower lows on the price action with the higher lows on our side, but it broke it, and we have the second attempt to establish this divergence, and potentially it might hold, but do not rely on this indicator alone. So 4 hours time frame, almost the same structure, the same picture. Daily time frame, and the daily time frame is not so bullish. As you can see, we have basically right after this dip, we have this bounce to the upside that pretty much unloads the entire bearishness of this asset, and then again it had the same movement to the downside, and for now we don't have any curvature and we don't have any signs of bullish divergence. That is why we have to be still very cautious, and if you want to catch the trade, wait for more confirmation, wait for the structure like this. We have to see higher highs and higher lows that will break previous swing highs, this one and all of these levels that we had previously. And the more breakouts we have, the more likely that it will be a new uptrend. But at the same time, guys, it is just an indirect sign of the trend reversal, and we have to know the structure inside this fifth wave. And it is quite weird, and as long as this range holds, and as long as this asset doesn't break this level of $2.3, technically we are still in downtrend. That is why if you're risky enough, you potentially can accumulate all the way down, but the bottom is not defined right now. And if you want to have more confirmation, wait for this type of price action. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed.